Hey, what's going on everyone? Chargepoint, which went public via a SPAC with Switchback Energy, just announced their first ever earnings report as a publicly traded company. Now, I'll cover the notes I took on it, and if you're unfamiliar with what Chargepoint's business model is, be sure to check out the video I've already done on them afterwards, but I'll also touch on it to a lesser extent in this video. Chargepoint just highlighted the benefit of a company going public and being able to raise money to set themselves up for financial success in the future. As after the merger, they now have over $650 million in cash on their books, and this is more money than they've actually ever spent in the whole 13-year history of this company. Chargepoint aims to be wherever people might be to recharge their cars. This includes at their own residence, around downtowns, and everywhere in between. Chargepoint already has a 71% market share of the EV charging sector in North America, including a committed customer base of many of the Fortune 50 largest companies in the world. Their business segments include a high-margin SaaS subscription model. I know these are super popular these days, with companies like Netflix and Spotify making that monthly reoccurring revenue consistently. That's something I really like about Chargepoint, is that they have this reoccurring revenue stream and they're selling their cloud software services at charging stations, because if they were just selling the actual electricity, which is not their business, I wouldn't imagine the margins would be that great or lucrative. Think about all the large commercial trucks and their fleets. These particular EV trucks have special software that Chargepoint offers that helps companies charge their trucks, keep tabs on scheduling, and charge at the most optimal, cost-efficient level of energy charging, which could save companies so much in the long run. As we continue to get into Chargepoint's earnings, make sure you've hit that like button and have subscribed to the channel so we can continue to earn this easy money together. 2020 was a tough year for all of us, but overall car sales were down 16%. But EV car sales were actually up 48%, meaning that long-term shift to EV cars is already happening even during a health and economic crisis. And remember, for Chargepoint to win, it doesn't matter which EV manufacturer is winning, whether that's Tesla or NIO or GM or whatever other competitor is out there. Chargepoint stations can be used for all of them. While overall miles driven by the typical person declined, such as for commuting or taking long distance road trips, fleet deliveries of essential products were more in demand than ever. By the end of 2020, there was now 500 million electric miles being driven using Chargepoint's charging station softwares, and that avoided 129 million kilograms of greenhouse gas emissions from being emitted into the air. Chargepoint also continues to partner up and integrate such services such as Apple CarPlay, Apple Maps, Google Maps, Android Auto to find the nearest charging EV stations. More and more EV charging locations continue to be added to Chargepoint's portfolio in 2020, and they anticipate this will only grow in the future as there's going to be increased demand in EVs. EV car sales will now be 4% of all new car sales globally in 2021. There's also continued political presence in both North America and Europe on the federal, state, and city jurisdictions to implement all government vehicles to be electric. Now, their actual overall Q4 revenues was just $42 million, and that's actually down 2% year over year. Now, the company blames this on the C-19 situation hurting their sales. 68% of all sales are commercial, but the company plans to put more emphasis on those big fleet large trucks, which has doubled in its contribution since last year. Up to 17% of their revenues now are from those large fleet trucks. What is great news though is that their subscription-based revenue was up 40% year over year, which really shows off this company's business model, as more and more of these stations are going to be built and they're going to gain momentum. Geographically speaking, Chargepoint is still heavily skewed in their revenues in North America at 92%, compared to just 8% in Europe, though they do plan on expanding in Europe pretty extensively here in the future. Margins are still hanging around the 20% range, which isn't too bad. They've been introducing many new products, which don't exactly have the highest of margins just yet, but once they continue to get this strong subscription-based model going and improve their cost structure, they should be able to do better next year. As more and more people return to physical work, this is only going to help Chargepoint, as their workplace products tend to have higher margin. As I alluded to earlier in the video, after their merger that they went through, they now have an all-time high of $600 million in cash available, which is huge for a company this size because they have a lot of growth initiatives planned in Europe and North America. Remember that a limitation of a balance sheet is that it's only accurate for a certain period of time. So its numbers right now are only accurate as of January 31st, 2021, but financial numbers literally change every single day, so they become relatively out of date very quickly. In this case, it was even before the merger actually went through. So yeah, the accountant in me had to mention this. They did provide guidance for Q1 of 22 of around $40 million, which would be about a 7 to 22% increase versus last year. And they also had full year revenue guidance of around $200 million in revenue, which would be an increase of about 37%. So overall, what do I think about this earnings report? I'd actually say this wasn't that great of an earnings report. And I'm someone who's usually pretty impressed, and my grading standards aren't that high, so that's definitely saying something. For a growth company like this to basically being flat, this is not what you want to be seeing. You want to be seeing companies in this stage to be having double-digit growth every quarter, making massive gains in new customers and sales, and I just didn't see that with Chargepoint this year. And I know some of that was out of their control, as 2020 was a very unique year, but I feel like a lot of companies are just overly using C19 as an excuse, because the great ones, they will always find a way to prevail, and we want to invest in great company. And remember, this is a company prior to their merger showing a 60% compound annual growth rate in their presentations. So we need to be holding them to a high standard. This is a company with an $8 billion market cap, but just over $150 million in revenues. In terms of valuation, they need to be wowing us with their results. Now, just because they had a so-so quarter, in my opinion, does that mean I think they're not a buy anymore? No, of course not. This is a company that once the C19 fizzles away and people start returning to work and start to travel more and start to live their everyday lives again, people will continue to ditch gas-powered cars for electric cars. That's going to allow for Chargepoint to only get bigger and bigger. This is estimated to be over a $100 billion plus industry by 2030. There's definitely a lot of room and demand for Chargepoint. It's no longer just a matter of if, it's a matter of when. So I want to get in on this space during its early days. I love doing options plays on growth companies as they tend to offer pretty good premiums in exchange for more volatility and risk. I actually just got paid $50 to do a put on Chargepoint at a $25 strike price that I bought on Wednesday, and I held it for just 2 days through their earnings report. Getting a 5% return on my money doing weekly puts isn't out of the question depending on one's risk tolerance. If you want to see when I'm buying and selling options with Chargepoint, make sure you hit that subscribe button and join the journey to reaching financial freedom. I make videos like this all the time, so be sure to hit that like button if you've enjoyed it. I'd also like to hear what you have to say about Chargepoint stock in the comments below, and I will buy, stash, collect cash you later.